Your income is your most powerful asset, your most powerful wealth building tool. So what would you do if you unexpectedly got sick or injured and couldn't work anymore? How long would your savings last you? Building your wealth is important, but equally important is protecting that wealth. And that's what disability insurance is designed to do, to protect your income, your wealth, everything that you've worked so hard for your entire life. Your disability policy is the one that sends you a paycheck when something bad happens to you and you can't make it to your 9 to 5 anymore or your 8 to 8. Disability insurance is income protection insurance. If you're one of the lucky ones who gets some form of disability insurance through your company, ask yourself this: do I really know how this works? And is my income fully protected? Because I can tell you from our experience, exactly 0 of our clients understood this before they came to us. And if you're in a high-earning profession such as medicine, dentistry, law, or finance, or you own your own business, be super diligent about reading the fine print because every disability policy defines disability differently. Get the wrong one, and you could be paid nothing even if you were never able to work again. Get the right one, and you could protect up to 60 to 80% of your income. As I mentioned, your income is your most powerful asset, your most powerful wealth building tool. So why wouldn't you put the same effort into protecting this income that you put into nurturing and growing it? By the end of this video, you'll understand very clearly how short-term versus long-term disability insurance protects your income, even when you're not able to work. The #1 tax reason that our clients have a private disability policy, even though their company also offers one. And the 5 questions you need to ask yourself to see if you should be looking at disability insurance now, or perhaps even yesterday. For our loyal subscribers and viewers, welcome back. We love you guys. And for those of you new to Diamond NestEgg, welcome to the #1 place to learn about money, insurance, and retirement. I'm Jennifer, first-generation American, and I've spent most of my life in finance. Started working at banks like JP Morgan and Goldman Sachs at the age of 17 and graduated top of my class from NYU and Harvard Business School. And now I work on all things personal finance with young professionals and employees at places like Bloomberg, WeWork, and Marsh McLennan. Now, some of you may recall my not-so-mini ski accident from earlier this year, which left me in crutches and a less than comfortable working state for quite some time. Well, had I had disability insurance, I would have been able to relax, not rush back to work, and my insurance company would have sent me a check for up to 60 to 80% of my income while I was in recovery. Instead, I sat through a bit of pain and discomfort, did my meetings, and made some more videos on life insurance and health insurance so that all of you can be wiser and better protected in your future than I was in my past. And don't just take me as that oddball, accident-prone example. Here's why disability insurance is so important, based on real hard numbers. According to the Social Security Administration, 25% of today's 20-somethings, basically 1 in 4 of these 20-somethings, can expect to be out of work for at least a year because of a disabling condition before they reach the normal retirement age. The Council for Disability Awareness has also found that the average duration of a long-term disability is 34.6 months. That's nearly 3 years. Imagine not being able to work for 3 years, not having any income for 3 years. What would you do? And over 90% of long-term disabilities are illness-related, not injury-related, as many people tend to think. Having disability insurance ensures that you can still pay the bills when you're unable to work. It ensures that all those years of getting your degree, scoring promotions, growing your network, building your career, or your business don't disappear into nothing because of an illness or injury that you don't have to dip into your hard-earned savings or worse, go broke overnight. There are 2 main types of disability insurance: short-term versus long-term disability insurance. And here are the 3 key differences between the 2 types. Difference 1, how long your income is protected for. How long will you be getting some sort of paycheck from the insurance company even though you're not working? Think of short-term disability insurance as protecting you in terms of months, typically 3 to 6 months. Say when you have an accident like I did. And think of long-term disability as protecting you in terms of years, say 2 years, 5 years, 10 years, or in some cases, even until retirement. Difference too between short-term versus long-term disability insurance is how much of your income is covered. Do you get the same amount on your disability check as you would with a normal paycheck? Not quite, unfortunately. Short-term disability generally covers up to 70%, sometimes even 80% of your current income, whereas long-term disability can cover anywhere between 40 to 70% of your income, depending on your policy provisions. So, for the ease of calculation, if you earn $10,000 every month, your short-term disability insurance could pay out up to $7,000 to $8,000 each month for a 3 to 6 month period. Whereas your long-term disability insurance would give you anywhere between $4,000 to $7,000 monthly, but over a longer period of time. And difference 3 between short-term versus long-term disability insurance is when do you get your first payout? When do you get your first disability check from the insurance company? With short-term disability insurance, the first check in most cases will arrive about 2 weeks after the date that your doctor has confirmed your disability diagnosis. This 2 weeks from doctor's diagnosis to first payment is called the elimination period. With long-term disability insurance, the elimination period is closer to 3 to 6 months, sometimes even longer. Again, this will depend on how your policy is written. Now, as I said previously, the vast majority of our clients have some form of disability insurance through their employer, but they also have a private one as well. And here's why. If you take anything away from this video, this is one of the 2 most important things to take with you. A disability policy via your employer is paid for with pre-tax dollars from your paycheck, which means that any disability benefit you get from your company disability policy, that disability check you get when you're not able to work, that's going to be taxable, like your normal paycheck. You have to pay taxes sometime. That's just the way things work. If you buy a disability policy on your own though, privately, you pay with after-tax dollars, not pre-tax dollars. So whatever benefit you get paid from this private disability policy will be tax-free. This tax-free benefit is the #1 reason why our clients pay for a private disability policy on their own. A $5,000 or $10,000 check that you don't have to pay taxes on is very different from a $5,000 or $10,000 check that you do have to pay taxes on. Guys, if you're enjoying this video so far, we'd love a thumbs up and a subscribe. This lets me know the money topics that you like the most, so we can keep making more of the same stuff for you. So, 1 in 4 20-somethings will be disabled for at least a year before normal retirement age. The average long-term disability lasts about 3 years, and nearly 78% of debtors in a recent consumer bankruptcy survey said that their bankruptcy was due to income loss. 44% of this was due to medically related work loss, by the way. Given these stats, we should all be running out to get disability insurance, right? Well, not so fast. But if you are running out to get disability insurance, drop us a note first at jennifer@diamondnestegg.com to see if we can sort out one that's best for you. Now, we talk a lot about emergency funds on this channel, that you should ideally have one that'll last you a minimum of 3 to 6 months. If you have this or are building towards it, like all our clients, that's the first thing we do with them. You actually don't need short-term disability insurance, because that's what your emergency savings are for, an emergency such as a short-term disability. If you don't have an emergency fund though, or if you're wondering, what about long-term disability insurance? Well, this gets a bit more complicated. Here's some general guidance. Ask yourself these 5 questions. If the answer is yes to any of them, then taking a look at disability insurance should move to a top spot on your list of financial priorities. Question 1, do you have others, such as a spouse, children, or other dependents that depend on your income? Are you the primary breadwinner in the family? Think about it. What would happen to them if your income suddenly stopped coming in overnight? Question 2, do you work in a highly specialized field like medicine, dentistry, law, or architecture? A surgeon with a shaky hand or a lawyer that can't make a closing argument? They won't have a very bright future ahead of them. Question 3, are you a business owner? What would happen to you, your business, your employees, and your clients if you suddenly couldn't work anymore. Question 4, do you have significant amounts of debt outstanding, such as private student loans? While federal student loans can be discharged under certain circumstances if you're totally and permanently disabled, this is not necessarily the case for private student loans. Our clients have on average over $200,000 of student loans, and every single one of them has a rider, an additional clause in their disability policy that covers student loan repayment in the event that they can no longer earn an income. And question 5, if you were to become totally and permanently disabled tomorrow, would you have trouble covering your necessary expenses until you retire? Now, if you answered yes to any of these questions and you're wondering, how much will a private disability policy cost me? Either because work doesn't offer it, or because the amounts offered at work are not sufficient to fully cover you, here's a rule of thumb. Your disability insurance should cover you, meaning it should replace at least 60 to 70% of your income, and will generally cost between 1% and 3% of your annual salary. So if you're earning $10,000 every month, like we used in the earlier example, this means you'd pay anywhere between $100 and $300 a month for your disability insurance, with short-term disability insurance typically costing more than long-term disability insurance. There are many factors that will influence the price of your disability insurance, and here's a brief overview of the 4 most important ones. The first factor that will influence the price of your disability insurance is the definition of disability in your policy. As you may recall, earlier I had said that one of the 2 most important things to take away from this video is that if you buy your disability insurance privately, whatever amount you receive from your disability check will be completely tax-free. The second most important thing you should take away from this video is that you need to very clearly understand the definition of disability in your policy. The 2 main definitions of disability are own occupation and any occupation. Own occupation means you qualify for disability benefits if you can't work in your specific specialty or field, whereas any occupation means you only qualify if you can't work at all based on your education, experience, and training. Let's take the example of the surgeon again, who developed shaky hand syndrome. If the surgeon's disability policy defines disability as own occupation, he would qualify for disability benefits because he can no longer operate on anyone. He would no longer be able to work in his own occupation, his own specific specialty. If, on the other hand, his disability policy defines disability as any occupation, he would not qualify for disability because he could still work in another field, say teaching medicine, for example. In an overwhelming majority of cases, professionals such as surgeons, dentists, lawyers, and independent business owners opt for own occupation. No one wants a surgeon with a twitching hand. An own occupation disability policy will cost more than an any occupation one. The second factor that will influence the price of your disability insurance is the benefit amount, the amount of money that you get each month, that you get with each disability check. The higher the benefit amount, the more expensive your policy will be. The third cost driver of your disability policy is the benefit period, how long you'll be receiving your disability payments for. The longer you want to receive your disability payments for, the more the policy will cost. And it makes sense. A policy that pays you your disability benefit until you retire should cost much more than one that only pays you for 2, 5, or say 10 years. And the fourth cost driver of your disability policy is the elimination period. How long you have to wait after a disability diagnosis by your doctor to receive your first check. The shorter the elimination period, the less time you have to wait, the more expensive your insurance will be. As our trademark saying goes, everyone's financial journey is different. Like with life insurance, you can check out these life insurance videos here if you're interested in learning about other ways to protect your loved ones and build generational wealth. As I was saying, like life insurance, health insurance, and all things money for that matter, there is no one-size-fits-all solution when it comes to disability insurance. Drop us a note at jennifer@diamondnestegg.com if you're interested in learning more about crafting a disability policy that's best suited for your needs. Thanks for watching, guys. If you enjoyed this video and found it useful, don't forget that thumbs up and subscribe. We'll be back next week with another money-saving, wealth-building video just for you.